morning. So we're going to work on section 7.5 on the 1040 forms. It also includes itemized deductions. So our essential question is, how can I reduce my adjusted gross income? So AGI. Okay. So when we're looking at this, everybody, you can say, so you might hear the term tax avoidance. So when we're doing that, we're maximizing our deductions. Tax evasion, on the other hand, okay, is to lie about items on the tax forms. Okay. Our deductions are subtracted from taxable income before you look up on the tax table. Okay. Okay, so credits, okay. So if you qualify for any credits, are subtracted from the taxes owed. Okay. So the one I was talking about, everybody, was a Schedule A. Is where we do itemized deductions. Okay. To replace any standard deductions. Okay. So examples would be that. So like for medical and dental expenses, including braces, job expenses. So like if you drive for Uber, you can deduct the miles that you're driving. Okay, so a certain percentage you can deduct for that per mile. Taxes paid for local and state. Okay. For theft, so like if somebody steals your car or breaks into your house, so theft and loss. Mortgage interest. And donations that you make to charity. Okay, so that includes like tithing to your church. Okay, any donations that you make. Okay, so let's look at this. So W-2. So you made $28,375. Okay. You contributed $23.05 bi-weekly to a flexible spending account. And 4% to a retirement plan. Okay, so we want to know how much that is annually or yearly. Okay, so we got, and then on a 1099 form, you earn $700 in interest. And $550 from consulting work. Okay, so from your flexible spending account, okay, so that's going to be $23.55 times 26. Remember, bi-weekly means every other week. So you contributed $599.30. Okay, for retirement, so it's going to be 4% as a decimal. So 0.04 times your annual salary, so the $28,375. Okay, so you contributed $1,135. Okay, additional income. Additional, notice that has that add, so we're going to add those two together. So 700 plus 550, so $1,205. Okay, so for your adjusted gross income, okay, so this is line B. Okay, so that's going to be, so we start with the income amount, so 28,375 minus the $599.30 minus the 1,335 plus, so that's additional income, so 1,250. Okay, so now the income is going to be $27,890.70. Okay. Okay, so basically that's the adjusted gross income. Okay, so let's say, let's do another example, everybody. So let's say we want to know what their adjusted gross income is for Natalie and Jeff. Okay, so their combined wages is $123,621. Okay, so that comes from their W-2s. Okay, and they're on the 1099 form. They earn $560 $60 in interest. In dividends, so dividends, everybody, is from stocks. And $3,522 on their rental property. Okay. They also paid $7,000 in alimony. $2,500 in moving expenses. Okay, so the adjusted gross income. Okay, so we start with their 123,621. Okay, plus remember additional income. Okay, and then we're going to subtract the alimony and their moving expenses. Okay, and that's going to give us their income. So it's going to be $118,203. Okay, so that's going to be their AGI, adjusted gross income. Okay, so we're going to keep going. And try to insert a line. Okay. Much better. All right. Okay, so we also have medical and dental expenses. So everybody, that includes anything that you're paying. So prescriptions, you have to check. So there's some things that they don't cover, but like so braces, so if you have to get cavities filled, prescriptions, co-pays. Okay, so out-of-pocket medical expenses. Okay, so just a gross income, we got 41,000. Okay, the IRS, and everybody, this I did double check. This IRS allows deductions, and so this still holds true, at least for 2020. Allows a deduction that exceeds 7.5% of the adjusted gross income, so AGI. Okay. So adjusted gross income. Okay, everybody will see that point that talked about even when you're going to do your taxes here, adjusted gross income. Okay, so we're going to use so 7.5%. Remember, drop the percent sign and go to left, add the decimal and the 0. Okay, so 0.075 times the 41,000. Okay, so $3,075. Okay, so if you paid $3,800, okay, so this is your medical expenses that you paid during the year minus your AGI times 0.075. Okay, so everybody, that's the IRS allowances. Okay, and yours was 3,075, so we subtract those two, and we get $725. Okay, yes, it's allowed. Everybody, if it's a positive number, okay, so everybody know if negative or 0. Okay. Okay, so let's look at another example. Okay, so let's say everybody, you had $18,100 what in medical expenses. And when you do this, you can add them together for your whole family, as long as they're being claimed as dependents. Okay, so your adjusted gross income is 53,000. Okay, so 100% minus 80 is 20%. So you're paying 20% of those expenses. Okay, so we're gonna have to figure that out. So it's gonna be 20% as a decimal. Times that 18,800. So 3,760. Okay. Remember, 100% minus 80% is 20%. Okay, so that's your medical expenses. Okay, now we have to calculate what the IRS allows. So 53,000 times 0.075%. So 3,975. Okay, so we'll deduct it. So the 3,760 minus 3,975. Okay, it's negative. Okay, so remember, everybody, if it's negative or 0, it's no. Okay, so the amount that you can deduct is 0. So how much can you deduct? It's 0. So I'll put that question in there. Okay, everybody is 0. Okay, so basically you can't deduct any. Okay, it just won't let you do it. I'll say nope, 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 nope. Okay, so to get the okay, so how to get the AGI? Okay, so we're going to add, and then we're also going to talk about things that we can subtract. Okay, so things that get added to your income, everybody. Okay, so things that we add: interest, any additional income that you have. Okay, so dividends, everybody, is money that you make from stocks and bonds. So dividends from stocks. Okay. Capital gains, so if you have like your own business, say like a home business, then that capital gain, so money that you earn from that. Okay. Rental property. Prizes, so if you win the lottery, win money like at the casino or doing anything like that. So wages. Okay, so that's from your paychecks. Okay, so all those are things that we add. Things that we subtract, okay, are, well, I guess so credits. So there's a child credit. There's different credits that you can take. Alimony, if you pay alimony. Child support. Moving expenses. Charity. Flexible spending account. Healthcare savings account. Retirement. Mortgage interest. So all those are things that you could subtract. Okay, everybody, you got this.